Amazon's latest quarter paired accelerating AWS growth with a sharper deterioration in free cash flow. The central investor question is whether the company's expanding AI and cloud opportunity can generate sufficient returns to justify an estimated $220 billion in 2026 cash capital spending. This is educational research, not financial advice. Please verify all data independently. Investors were looking for roughly $196.0 billion in revenue and $1.82 in GAAP earnings per share. More importantly, the quarter needed to show that AWS growth was reaccelerating and that AI demand was translating into revenue, while addressing concerns over rapidly rising infrastructure investment. Amazon delivered a clear headline beat, reporting $200.6 billion in revenue and GAAP EPS of $5.75, ahead of the supplied consensus estimates. Revenue rose 20% year-over-year, operating income increased 43%, and EPS growth was amplified by factors beyond core operations, including investment-related gains. Shares responded positively as investors focused on the acceleration in AWS, where growth reached 37% year-over-year. The stock rose more than 9% after hours on July 30th and gained 15.3% in the following regular session, suggesting that AI monetization and cloud profitability outweighed immediate Capex concerns. AWS generated $42.2 billion in sales, up 37%, while operating income climbed 64% to $16.6 billion, and margin expanded to 39.4%. Advertising also remained a meaningful growth contributor, rising 26% to $19.8 billion, while management said the AWS AI business surpassed a $25 billion annual revenue run rate. Operational profitability and operating cash flow improved, but spending rose even faster. Quarterly property and equipment purchases reached $54.2 billion, and trailing 12-month capital spending climbed to $169.0 billion, contributing to negative trailing 12-month free cash flow of $7.6 billion. Amazon guided for third-quarter sales of $197.0 billion to $202.0 billion, and operating income of $22.5 billion to $26.5 billion. The supplied research does not include prior guidance or consensus comparisons, and Amazon did not provide formal EPS guidance, limiting a direct assessment of the outlook versus market expectations. Management's message was that accelerating AI demand is driving higher AWS consumption. AWS posted its fastest growth in 18 quarters, while both the AI business and chips business exceeded $25 billion annual run rates. At the same time, Amazon raised expected 2026 cash Capex to approximately $220 billion. The quarter showed meaningful operating improvement through faster AWS growth, stronger AWS margins, and a 43% increase in consolidated operating income. The offset was cash intensity. Free cash flow turned negative, equipment purchases jumped 68% in the quarter, and reported EPS included Anthropic-related investment gains. Before the report, investors were still seeking evidence that AI spending could produce measurable commercial returns and revive AWS growth. After the release, 37% AWS growth, margin expansion, and a higher AI revenue run rate strengthened that evidence. Although the much larger Capex burden remains unresolved, the bullish case rests on AWS's 37% revenue growth, a 39.4% operating margin, and an AI business above a $25 billion annual run rate. The bearish case centers on approximately $220 billion in projected 2026 cash Capex, negative trailing free cash flow, and GAAP EPS that benefited from Anthropic investment income. The next report will test whether AWS can sustain growth near 37% while preserving its 39.4% operating margin. Investors will also watch delivery against the sales and operating income guidance ranges, along with Capex pacing, cash flow trends, and potential pressure from rising memory costs. The scorecard reflects exceptionally strong headline results and AI momentum, with solid profitability and guidance. However, the lower execution outlook score highlights the key remaining issue. Amazon's operations are performing strongly, but the ultimate investment case depends on whether its unprecedented Capex can produce durable cash returns. Thanks for watching. Like, share, and subscribe. Then visit AIStocksHub.com.